Yeah, it's time to go global now. We start from the United States. That news yesterday about the U.S. debts surpassing $40 trillion. That's a new record. We have our correspondent in Washington, Maria Bird, joining us to discuss the implications of this. Hey, Maria, good morning and welcome to the program. Hello, Maria, can you hear me?
Yes, can you hear me?
Yes.
Sorry.
Yeah, I can hear you now. So I was asking this issue of a new record high of U.S. debt. I mean, other countries like Nigeria were worried about our debt status. Is the U.S. worried also? Or, I mean, a lot of people think that the dollar can just be printed to meet up with whatever obligations are left.
Yes, the U.S. is a bit concerned, as you mentioned, around the U.S. debt, specifically because I think many Americans had expected that we would see an increase in the American debt. And now we're up to $40 trillion, as you stated and as we've been reporting. And specifically, what the concerns are really around the spending, especially with the Iran-U.S. conflict right now, and also other spending that has been as it relates to global conflict. Obviously, military utility is extremely expensive, and is typically what creates some of the challenge with the U.S. debt.
So, what are the implications of this to the citizens, especially?
Yes, many of the implications really regarding the U.S. debt are really going to be around what we're dealing with right now with inflation. The other issue is going to be around Americans being able to themselves come out of debt, because typically when the U.S. debt is challenged, we're also dealing with some debt challenges and a lack of access to capital for the everyday American. We know we've been talking quite some time now about Americans feeling a little short in the pockets, and the everyday American not having all of what's necessary to live each and every day. And so that is one of the greater challenges that has been experienced. I think what we're also going to see is we're going to continue to see some rising in some of our yields. As we look at specifically like treasury bonds, those are going to kind of be an area many people, are looking at the market too. The stock market could be impacted by some of this. But the hope is that obviously as the debt continues to grow, though, that we are having some other areas that are going to offset. If companies are able to stabilize and able to bring some stabilization to some of what we've seen with the earnings reports over the last couple of days, I think we could see some recovery, but it's really going to be upon the Treasury Secretary to find a way to reduce our debt.
Well, President Trump had warned, I think that was last week or so, to prepare Americans to pay more for petroleum products.
Yes, and so, I think that the president has never been afraid of some of the challenges that many Americans might have felt around the debt. He believes there are certain things that have to be addressed. And obviously the president has a different way in which he addresses some of our economic challenges, specifically around reducing, as we know, when we saw major reductions in the federal government. So there are some other areas that he sees that we can find ways to reduce spending. And so I think there is a long-term strategy. The question, though, is how much of that debt, and as you were so right to mention, our debt has pretty much doubled, which I think has many wondering where is that going to lead the U.S. In the coming years.
All right, Maria. Well, just before we let you go, let's get a recap of trading of the markets yesterday.
Lottie, the U.S. stock market thought it had a relief on Wednesday, but on Thursday we saw a bit of a downward tick, as the Dow Jones led the day down in 1.32%, and the S&P 500 was down at 0.85%, and the heavy tech Nasdaq was down in 1%, as this was mostly due to what people are looking at retail reports, as retail earnings reports showed a bit of a dip, as this made many concerned around companies like Walmart, major big box stores, which are showing some bit of a challenge in their earnings reports. It's also clear that the oil prices are on the rise again, which means the U.S. economy could be a bit struggling. But only time will tell how the market will respond in the days and weeks ahead.
That's right, Maria. Only time will tell. Thank you all of that from the United States there. And moving away from the U.S., the amount of Iranian oil that's readily available to Chinese buyers, that's rapidly running out, showing the effectiveness of the U.S. blockade of the country's ports at choking off revenue to Tehran. About 40 million barrels of the Islamic Republic's crude is sitting on the vessels near Singapore in an area that's popular ship-to-ship transfer location for oil leading to China. However, only 10% of that, or two supertanker cargoes, remain unsold. This is according to data intelligence firm. And still around that, ship owners, including Sinocor Group, are helping Saudi Arabian crude exit the Red Sea via the safer northern route as Iran-backed militants target the kingdom's export via the Bab el-Mandeb choke point in the south. State-owned Saudi Aramco has been exporting more oil from ports such as Sidi Karil in the Mediterranean Sea after Yemen-based Houthis started targeting ships that had loaded at the Red Sea export terminal at Yanbu. Over the past month, vessels controlled by South Korea's Sinocor and Norway's DHF management have been seen shuttling cargoes from Yanbu to Ain Sukna, where oil is discharged and piped north. In the United Kingdom, Britain's government recorded an unexpected budget deficit last month, a reminder of the financial constraints facing new Finance Minister John Healey ahead of this October budget. In spite of better news of the economy, the Office for National Statistics said that public sector net borrowing was £1.8 billion, and that's in July, as higher government spending caused by inflation contracted record self-assessed income tax receipts for the month. And still in the United Kingdom, retail sales declined in July, ending a 2-month run of growth as weaker clothing and footwear purchases weigh on consumer spending. Figures from the Office of National Statistics show that retail sales fell 0.5% month on month, following a revised 0.7% increase in June. The decline is slightly worse than the 0.4% fall that economists had expected. Still in the United Kingdom, banking sector is warning the government that a proposed windfall tax on lenders could weaken the country's international competitiveness and threaten jobs and investment. Industry body UK Finance, representing major banks including Barclays, HSBC, Lloyds and NatWest, they are asking Chancellor John Healey to avoid further tax increases on the sector ahead of the October budget. In France, private sector unexpectedly weakened this month as extreme summer temperatures are taking tolls on the service sector. S&P Global's Composite Purchasing Managers Index declined to 48.8% in August from 49.4%. And in Asia, Japan's consumer inflation accelerates in July, adding to expectations that the Bank of Japan could raise interest rates again as price pressures strengthen. Headline consumers went up 1.9% year on year from 1.6% in June. And this is the third consecutive month of acceleration in inflation.